Achievers MCQ series for BFM, and today's topic is credit policy. Very important topic. Okay, so what is credit policy? What are the details? What is it different from the monetary policy? We'll be covering everything. So follow this video till the end. Okay, and importantly, the objective questions at the end are very important. Okay, that's why follow it till the end. Firstly, download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material, current affairs, job alerts, daily quizzes, live classes, ebooks, then tests. What all do you need for CAIIB now? That much. That's it. So, firstly, download it ASAP. Secondly, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting all the updates on JAIIB, CAIIB, and various banking exams. And also, importantly, you will be getting free YouTube series on all the topics of CAIIB. Okay, so immediately subscribe, click the bell icon. This is a new batch, just now started. Yeah, for CAIIB, ABM, BFM, ABFM, and BRBL. All the 4 subjects are covered. Presently, 80% off scheme is going on for Republic Day sale. Okay, so grab it ASAP. Use the code Y432. More on this later. Yesterday I had asked you a question. When foreign currency is fixed and value of the home currency is variable, it is called as direct rate, indirect rate, cross rate, or variable rate. So what is it? Suppose foreign currency is fixed. See, this dollar is fixed and rupees is fluctuating. Then it is called as direct rate. So the correct answer was direct. Correct. Many of you gave the same answer. Direct is the right answer. Whenever you have foreign currency fluctuating and home currency fixed, then it's called as indirect rate. Okay, we don't have indirect rates in India. In India we follow always direct rate. Okay, so what is the credit policy? Here, credit policy is the set of terms that lays out how your company means your company or the organization, anything. Here we are only talking of credit policy now. That the credit policy can be of RBI, the credit policy can be of company, the credit policy can be of individual. So it can be of anyone. So credit policy is a set of terms that lays out how your company or organization or India or country, right, or individual, how will you issue the credit to the clients and collect the unpaid debts. Okay, so same logic is used by RBI also. Issue the credit to the clients. How does RBI issue the credit to the clients? Through basically this repo rates. Okay, RBI lends to the client. Who are the clients of the RBI? Banks. Okay, RBI lends to the banks through repo rates and collects unpaid debt. Collects means what? Whenever it lends, the bank has to give back the loan also. So that is known as unpaid debt. So at that time, bank will give back the securities. Here it's very simple. RBI gives the money and gets the securities, means bonds, government bonds, and later when the bank wants to give the money back, they'll give the money back and RBI will give back the securities. Okay, so basically this slide is only for knowing what is the credit policy. Let it be of country, let it be of company, let it be of individual. Anytime you invoice a client for services and begin working before the client pays you, you are technically working on a credit, even if you don't have a formal credit policy. Don't you think RBI is also doing the same thing? See here, you invoice a client means what? You give the credit to the banks, okay, on repo, and you start working on that. That RBI has lent to the banks, and the banks have started working, and RBI also knows that this much money of mine is gone to the clients, and based on that they frame that credit policy. So it's basically how do I give my credit to the banks as a RBI, and how do I collect the money from them. That's it. Is monetary policy and credit policy same? We always have this question, because every time this monetary policy topic comes up, we always feel that is this monetary and credit policy different? Then why is it called as credit policy? If it's one and the same, why we have 2 names over here? Okay, so remember, first point is monetary policy and credit policy same? Yes, they are same. Credit and monetary policy is the macroeconomic policy laid down by the central bank. It involves management of money supply and interest rate, and is the demand side economic policy used by the government of a country to achieve macroeconomic objectives like inflation, consumption, growth and liquidity. So remember, this policy, monetary and credit is one and the same. Then why do you have two different names then? Because here monetary means what? Printing of money, and credit means what? Giving the credit to the banks. Okay, so both are actually interrelated. Printing the money is a subsidiary part. It can't be the main option, or it can be the main job of RBI. RBI's main job is credit creation. Credit creation means we have CRR, right? What is credit creation? Suppose, let's say, I'll give you one simple example. If let's say I deposit 100 rupees in a bank, okay, in a bank, what is credit creation? That's what you have to look at, okay? 100 rupees in the bank, and let's say the CRR is now 10%. CRR 10%. So what will happen? CRR is 10% means this bank will keep 10% out of this 100 in CRR, and remaining 90, what will that bank do? That bank will lend, okay? It will give loans, okay? Loans to somebody. So what will happen with this 90 rupees now? This will go in another bank, because this bank will lend means it will give a DD, it will give a transfer, something like that, right? So this 90 rupees will go in bank 2. Let me call this B2. What will happen with this B2 now? This 90 rupees are gone into B2, again 10% CRR. So what does B2 will do? This B2 will again lend 90% of this. So lend again. How much lending now? 81. Isn't it? 10% kept in CRR. Okay. So your CRR was 10 rupees. Your CRR is 9 rupees. Right? 9 is my CRR. 10% of this. Your CRR was 10 rupees. So what will B3 do now? Again same logic. See this, B3 will keep 10%. So CRR is what now? 8.1 rupees, right? And remaining amount is what? 81 minus 8. What is that roughly? 81, 82, 70 to 73, right? So roughly I'll take it 73, okay? So this 73 it will lend again to B4. So this will go on. So 100 became 90, 90 became 81, 81 became 73, then it will become some 64 something, some go on until the time it becomes 0. So what has happened actually? This 100 rupees which I had deposited in the bank created so much of the money in the market, 90, 81, 74. If you total this, it will go hugely, okay? Because see here, this is same as the sequence and series which we used in our those science students might be knowing, right? It is similar to that geometric progression, negative side, okay? So now that was about the credit policy, this CRR, and how does the credit work. Now if there is a gap in this credit, then only the printing of money comes in. Printing of money can't be the primary objective of any RBI, okay? So coming back, credit and monetary policy is the macroeconomic policy laid down by the central bank. It involves management of money supply. Remember this, money supply means printing of money. Money supply can be of two ways, okay? One is printing of money and second is credit, this credit, okay? And interest rate is the demand side economic policy used by the government of a country. Demand side means what? See here, this is demand side. Why? Because if 90 rupees goes to a client, that client will purchase something. 81 rupees goes, that will purchase. So this leads to inflation. Okay? Yeah, move on. What are the measures of credit policy? See this, credit control is the main task of any RBI. Credit means not only loan. Credit means these debentures, bonds and debentures and the liquidity in the market. So there are two methods of controlling the credit. One is quantitative measures, second is qualitative measures. We'll have a separate video on this, I think so tomorrow only. So tomorrow's video, watch this, okay? I'll cover all these quantitative and qualitative one by one. Tomorrow I'll be covering quantitative, then after that we'll be covering qualitative, okay? So quantitative measures. Quantitative, I'll just name them now. Reserve ratios, CRR and SLR. Then OMO. And third is this policy rates. Bank rates, repo rates, reverse repo rates and MSF, marginal standing facility. Okay. So these are the main measures of under quantitative control, okay, of RBI. And what is the qualitative? Credit rationing, consumer credit control, margin requirements, moral suasion and direct auction. All these we'll be covering in separate topics. Tomorrow is quantitative, and qualitative is day after tomorrow. Follow the same time video. Okay, move on. Now, if RBI hikes the interest rate goes up, then what happens? It lowers the economic growth. Growth is hampered. Also, inflation is controlled. Here, always remember, inflation high, growth is high. Inflation low, growth is low. So, inflation and growth, okay, inflation and growth, they always go hand in hand. Okay, generally 99% cases they go hand in hand. Inflation increases, growth also increases. Growth increases, inflation also increases. To control this, okay, to control high inflation and high growth, what will RBI do? RBI will give increase the interest rates. Interest rates, if RBI increases, interest rate means the CRR. Okay, if RBI increases CRR, then what happens? Rate of interest goes up, so inflation comes down, growth comes down. Reverse is the case with interest rate cut. If RBI cuts interest rate, economic growth becomes higher and inflation becomes economic growth higher and inflation also increases. Yeah, so both of them will increase over here. Okay, now before going to the questions here, questions time, let me come to these batches. The batches of ABM, BFM, ABFM and BRBL. All the 4 subjects are covered. Numericals, objective questions, theory questions, everything is covered. 80% off is still going on for the scheme. Okay, for the Republic Day offer. So click on, definitely grab it ASAP. Use the code Y432. Everyone like the video first. Click on the bell icon. Everyone do it fast. Fast do it. Okay. Yeah. Because it's whatever is free, you can do it right now. Am I asking for money, isn't it? Do it free. Okay, move on. Bank rate is same as. What is bank rate? Same as means what? The choices are MSF, repo, reverse repo and none of the above. Very difficult one. So bank rate is what? Presently, bank rate means what? It's not the meaning. Understand? Bank rate is not, I am not saying about a meaning. Bank rate amount wise, percentage wise, same as percentage wise. So what it is same as, okay, I'll just give you the details about bank rate because just tomorrow I'll cover it separately. But bank rate is the rate at which RBI is ready to buy or rediscount the bill of exchanges or other commercial papers. So the bill of exchange is discounted by RBI at bank rate. Always remember. Okay, bank rate acts as a penal rate charged for the banks, okay, for shortfall in meeting their reserve requirement, CRR and SLR. So if any bank falls short, okay, while meeting their CRR and SLR, they will be charged penal interest, and that penal interest is bank rate. Bank rate has been aligned to, now this is the answer of the question, bank rate has been aligned to MSF rates, marginal standing facility rates, and changes automatically as and when the MSF changes. So now the answer is bank rate is same as MSF. Okay, this is known as the upper level of the corridor. Okay, expand MSF, marginal standing facility, minimum standing facility, marginal sitting facility, and none of the above. What is the option? Yeah, marginal standing, minimum standing. Okay, C and D are out, means third and fourth are out. So marginal standing, minimum standing. Yeah, it is. Everyone, it is. Yeah, marginal standing facility. Got it? Marginal. What is meant by credit and monetary policy? So this was the basic topic. What is meant by credit and monetary policy? A, B, C and D. Let me see who can answer now. The process by which Parliament controls the money supply, the process by which central bank or the monetary authority of a country controls the supply of money, the process by which international markets control the money supply, and none of the above. So credit and monetary policy is given by whom? Is it given by government or is it given by RBI? Who gives it? Type fast in the comment section. Who gives the credit and monetary policy? Government or RBI? Right? It is RBI. Here, always remember. Credit policy, credit I'll write it CM, credit monetary. It's always given by RBI. Okay? And government policy gives, government gives fiscal policy, fiscal. Okay? This is given by government. So always remember, which is the main one then? Credit monetary or fiscal? This is the main one. Main. Which is the supporting one? This is the supporting one. Always remember, RBI will always support the government. Government will not support RBI. Isn't it simple? Means who is for whom? RBI is for government. Government is not for RBI. Right? Government is for whom then? If government is not for RBI, then government is for people, common public. Right? Yeah. So, what is central and credit and monetary policy? So, the correct answer is B. The process by which central bank or the monetary authority of a country controls the supply of money. Okay, that is important, right? What is the difference between real interest rate and nominal interest rate? Okay, firstly understand real and nominal. Okay, always understand real is with base rate, base year. Real is always with base. Nominal, anything, let it be real interest rate, real inflation, whatever it is. Real is always with base year. With base year. Okay, base year. And this is without base year. Okay. Always remember this. Real is always with base year, without, this is without. So if I am considering something with base year, I'll have a comparison. So that comparison is called as what? Look at this. Real interest rate take into account inflation. Inflation is taken into account. Nominal interest rates are those which apply only to borrowers and not to lenders. So nominal apply to borrowers and not lenders. Is it so? So which of them is correct? Only one, only two, both 1 and 2, and none of the above. So the correct answer is, see here, firstly real interest rate. They account for inflation. Yes, because it's base year. So when you have base year, you have something for comparison. So the correct answer is 1 is the correct answer. What about second one? Nominal rates are those which apply only to borrowers and not to lenders. Means they don't apply to lenders. So the correct answer is only 1. Right? Only 1. Got it, everyone? Now for your homework. What is OMO? Open market operations. Outright purchase or sale of government securities by Reserve Bank. Outright sale of government securities by Reserve Bank. Outright purchase of government securities by Reserve Bank, and none of the above. So purchase or sale both, or only sale, or only purchase. So that is the basic question. So I'll answer this tomorrow. Okay. Before going, see this. How to use the code Y432. 80% off you are getting. I'll show you live. Okay. Let's go to Adda 24/7. Let me go to Adda 24/7 live over here. Hold on. Yeah. So if you are having the app, I would suggest go on the app, because what happens in the app, you will be having 1% extra. Okay. So that's an important part. See here. Once you go to Adda 24/7, click on JAIIB and CAIIB. Now you'll see this JAIIB, CAIIB, Mahapack and CAIIB 23. Click on CAIIB 23. In this, now click on this new batches. See this, February 10th new batch is starting. So click on this batch. Okay. Once you click on this new batch, see the details you'll be getting over here. What are the details? Means what are the timings of the batch, plus what is the schedule, what are the dates, plus what is the study plan. Importantly, recorded videos are available 24/7. So this is very important for you. Okay. If you miss out on any class, you can definitely get it back. Okay. Through the recorded sessions. 2 interactive classes, so you can definitely ask the questions there and then itself. Ebooks are available. Tests are available. What all do you need more? Isn't it? 23,999 fees. Click on view offers. Look at the discounts. Okay. Put the code Y432. Click on apply. Serious. 23,999 now reduces to 4,799. Such a huge discount you are getting of 80%. Okay. Go for it. Also, I would suggest instead of going for a single batch, you can go for multiple batches using Mahapack. How to get the Mahapack? Go to again Adda 24/7 live front page. Okay. Click on JAIIB, CAIIB, Mahapack. You'll see the Mahapacks over here. Click on CAIIB ka Mahapack. Okay. CAIIB Mahapack, you'll again get the details over here. All the details. What details in the sense? See this. How many batches are you having for CAIIB? See this. Under Mahapack, you are having 15 plus batches for CAIIB. Okay, 15 plus batches. Then 15 plus full length mock tests. Recorded videos are available, but obvious recorded videos are there in every batch now. Okay. So 50 plus topic wise question ebooks. Okay. So now let's come to the fees part again. The fees part is 35,996. Click on view offers. Put the code Y432. Now look at this. Y432. Click on apply. See this. 35,996 reduces to 7,199, and that also valid it is 12 months. 7,199 for 12 months. It's an investment for lifetime. Okay. It's not more than 600 rupees per month, isn't it? Investment for lifetime. Go for it immediately. Okay. Why? Because the portion for CAIIB has changed. Remember, it's not the same portion as it was earlier. Okay. For those who don't know, remember ABM, BFM, ABFM, newly added subject, BRBL, newly added subject. So these two subjects are added new. Also electives, rural, HR, IT, central banking, race. There is no retail elective. Negative marking is removed. That's a good sign for you, isn't it? But there are subjective questions. It means you'll have to write the answers for something. You have to solve the questions. Okay. So that's why I would suggest join the batches ASAP. Tomorrow I'll be back with another series.